the midweek edition of Business Morning. Thank you for joining us. I am Bolaji Akiwali. Today on the program, we will beam a searchlight on the need to develop Nigeria's infrastructure with emphasis on financing the country's infrastructure needs. We'll be joined later on the program by Professor Akpan Ekpo. He is the Director General of the West African Institute for Financial and Economic Management. Also is Dr. Ese Owe, Associate Fellow, Center for Infrastructure Policy, Regulation and Management, Lagos Business School. We'll get back to this issue shortly, but let's move over to other headlines that made the rounds today on the program. The Senate on Tuesday said the Nigerian National Petroleum Corporation had not accounted for the 32 naira removed as subsidy on each litre of premium motor spirit petrol sold from January 2012 to September 2013. It lamented that officials of the NNPC failed to honor its invitation to give account of how they managed the crude fund. Members of the Senate had a committee on subsidy reinvestment and empowerment program raised the alarm after the NNPC and the Central Bank of Nigeria's officials failed to honor an appointment with them on Tuesday. Also in the news, from next year, you will be able to withdraw your money from the automated teller machine only on one condition, and that is with the use of a fingerprint. Now, this is the latest development in the Central Bank of Nigeria's cashless initiative. This decision was taken by the Central Bank and the Bankers Committee after it sealed a biometric solution pact with a German firm, Demolog, for the development of a payment system that will be driven by fingerprints. The move, according to the governor of the Apex Bank, Mr. Lamido Sanusi, will help to revolutionize the country's payment system. Sanusi noted that the system would become operational on February 14, 2014. The move followed the recommendation of a subcommittee chaired by the Group Managing Director of Zenith Bank, PLC, Mr. Godwin Emefiele. And finally, on the headline news, so this morning, the Bureau of Public Enterprises, just to give you an update on the power sector, which was a main topic for the past 2 days. And now there's now reactions from the BPE. It said that the electricity distribution companies handed over to private investors last Friday are required to invest about $1.8 billion. Now, that's an equivalent of 288 billion naira as expenditure over the next 5 years to attain efficiency and meet the required capacity. Now, the Director General of the BPE, Mr. Benjamin Diki, who gave this indication in Lagos, said the discos will be required to spend a total of $357.7 million this year alone of the 355.7. We're looking at the breakdown there on your television screen. We're looking at the Abuja disco would be expected to invest $36.6 million this year. Okay, Benin disco would require to spend $24.3 million. Enugu disco $27.2 million. Ibadan disco just over $43 million. The Just disco $22.7, Kaduna $29.9, and Kano we expected to spend $30.3 million. So we have just few weeks to the end of the year. Let's see how these discos will be able to expend this huge amount of money and turn around the power sector just within a few weeks to the end of the year. Okay, now we move over to the stock market. We were seeing impressive numbers coming out from the bourse. Yesterday, we continued to see the rally. Of course, the market ended on a positive note as the All-Share Index appreciated by 0.31 to close at over 30,000 points. We told you on the show that there are predictions from stock traders that the All-Share Index may likely hit 40,000 point level by the end of the year. Perhaps we are moving closely to that figure. Okay, we saw that very wonderful number, if you ask me, coming out from the Nigerian Stock Exchange. Looking at the numbers very closely now on your television screen, the All-Share Index closed at 38,054.23 points. Market cap 12.15 trillion naira. Checking out the gainers list now. Checking out the gainers list, we saw a number of very good numbers coming from some of the quoted companies on the exchange. Nestle still continue its gaining streak there, added 24 naira 81 kobo to its share price. 40 oil 8 naira 2 kobo, Presco 1 naira 8 kobo. 2 days ago we saw Nestle adding 56 naira 43 kobo to its share price, and that was one of the reasons that actually pushed up the numbers at the end of the trading session. On the losers table, PZ 59 kobo, Guinness lost 50 kobo the second time in a row. We're looking at Guinness still dropping part of its share price. Guaranty Trust Bank lost 37 kobo. Okay, the top trades now. We're looking at Transcorp, one of the companies that actually took over ownership of one of the discos in the country. We're looking at Transcorp actually pulling 67.95 million shares. UBA chopped up 26.89 million shares, and Wapik Insurance added 26.29 million shares to the overall shares yesterday. And the total volume for Tuesday's session was 319.98 million units of shares, value at 2.78 billion naira, and the deals, just over 5,000 deals were recorded yesterday. To give us more insights or give us some of the reasons why we're seeing the numbers still in the green, Rotimi Fakayijo is joining us live from the floor of the Nigerian Stock Exchange. Good morning, Rotimi. Okay, we're seeing a rally. The rally is actually being sustained by the market. What forces do you think is behind all of this?
Well, I think the market, for some months back, second in the scope, we saw the market relapsing to a good extent. But this time around, I think we drank it's not here. And with the torrent of first quarter results and also the anticipation of the auditor report for 2020, investors are actually taking positions with respect to that. We all believe that more than before now, we see more participation coming from the foreign portfolio investors. At least there is some demand for some certain securities, and I think that this is really playing well for the market. This trend is likely to continue, even if not on the day-to-day gain of the index. But if the index does not gain on a day-to-day basis, but the upward movement is going to continue, I'm going to see that even till the year end. Basically, my own opinion is that the trend as it was, we definitely boosted by some of the reports that we have gotten for the single companies, and there's every tendency that we will continue to participate.
I'm actually interested in Nestle, 40 Oil. These two shares have continued to be on the upside at the end of the trading sessions. What are the news behind this movement? We've seen Nestle, the food giant, and also 40 Oil moving up north. What are the news driving these figures?
Well, I think in my own opinion, it's been quite a while that for Nestle Foods, it's been quite a while that the issue going on to investors. And I think there's everything that may happen at the end of this financial year. It's just my own opinion. And I think basically that may actually be what is driving the price. But for 40 Oil has not paid dividend for quite some time. And this time around, there are still very positive figures coming from there. And if investors believe alike that there's every tendency that they will do a dividend that is worthy of the price. At least maybe something that is commensurate with what the price that we are having presently. So with the reports that we are seeing for the third quarter, it's actually putting them in a very strong position to be able to pay a very good dividend. I believe this is basically part of what is causing the price. And sometimes there is the news that there is a tendency for them to come to the market, but that one is not funded yet. So believe that just looking at for the result, that is definitely what is driving the market for now.
Let's look at Guinness. Okay, let's look at Guinness. Guinness has lost for the past 2 consecutive sessions. Why do you think the stock has been, losing some of the share price?
I didn't get that again.
Guinness has been losing for the past 2 sessions. What do you think it's happening to that share?
Well, Guinness is like. Did you say Guinness?
I said Guinness, if you can hear me very clearly. I said Guinness Nigeria has been losing for the past 2 sessions. What do you think is responsible for the slide in the share price?
Well, I don't think that trend is going to continue. I was talking to some colleagues. The first time it lost about 6 naira. The second time about 4. And there's every tendency that trend will continue to stay. I would like to see Guinness coming back on the Guinness chart. Basically, what is responsible is the demand and supply. For the period in question, the last 2 trading days, there has been some influx of sales coming on for that stock. But basically, today, we are definitely going to see another trend following in. The gaining, the losing spree is almost stopped yesterday, and we are most likely to see it on the Guinness chart.
Okay, just before I let you go, let's talk about the earnings. Yesterday we saw International Breweries actually posting its 3rd quarter result, and it was quite impressive, just as we've seen other companies report their financials either for a 9-month or the 3rd quarter. What do you think we'll be expecting? What earnings are we going to be expecting today and for the rest of the week? What earnings do you think will be coming into the market before the end of the week? We saw International Breweries posting its 3rd quarter result yesterday.
Yes, I think, that result was good. But we are also having in the market today, NASCON PLC. Although for the top line not being impressive, they were able to cut down on their costs, and they were still able to see the profit that they had for the same period last year. So I think for then for the result that we have seen, Nigerian Home PLC is also has also been released in the market, and I think basically we're going to see much more of that coming for the end of the week. But so far, so good. I'm still of the opinion that the result having sent so far is at about 80% performance coming from the various companies, and it's just about 20% that are larger in terms of the stock with their profit after tax. I think those ones are still very much valuable, and the market has reacted according to.
All right, Rotimi, we have to leave it at that. Thank you for joining us on the program.
Thank you.
All right, thank you. That was Rotimi Fakayejo, the CEO at Enterprise Stockbroking Limited. We'll get to updates on the stock market later on. Of course, you heard him say that we're expecting Mansard PLC to also post its earnings, perhaps before the end of the week. Let's take a breather now. We're moving into the newsroom. Ayotunde Balogun is standing by to give us some of the latest headlines that we're getting. Good morning, Ayo.
Morning, Bolaji.
Of course, the political arena is heating up.
Exactly, heating up, particularly in River State. So, of course, you know what happened yesterday. So, I'll try to give the people, the viewers, what they want to hear concerning that one. Well, let's start off right away. Now, perhaps saddened by the political happenings, the recent political happenings, and the seeming show of intimidation from political opponents, both within and outside River State, the state capital, Port Harcourt, played host to a rally yesterday. Now, Governor Chibuike Ameja and his supporters received the national leadership of the All Progressives Congress, the APC. The leaders of the APC threw an open invitation to the people of River State to join and support the party in recognition of their quest for good governance. On his part, Governor Chibuike Ameja said that he would consult widely before he makes a decision on that move, talking about the APC leaders' request to have him join the APC. Now, the Inspector General of Police, Mohammed Abubakar, has been summoned by the House of Representatives over the actions of police officers in disrupting the meeting of 7 governors and members of the National Assembly in Abuja, the federal capital. In a motion supported by 61 lawmakers and moved by Idris Kutigi, the lawmakers said police authorities have in recent times disrupted several meetings of these governors, an action they describe as an impunity and a disregard for the 1999 Constitution. The House therefore mandated its Committee on Police Affairs to investigate the matter and, of course, report in 2 weeks' time. Well, the Presidential Committee set up to dialogue with the Boko Haram sect has submitted its report to the President. According to the Presidential Committee, the leadership of the insurgent group refused to have any dialogue with them despite all their efforts. Now, the chairman of the committee, Kabiru Turaki, explained that the situation posed a challenge, including other difficulties they experienced while carrying out the assignment. However, many of the key members of the insurgents in detention have accepted the dialogue option as capable of a full resolution of the ongoing conflict. Now, it was in this vein that the committee recommended that the President should set up an advisory committee on continuous dialogue. Receiving the report, President Goodluck Jonathan said that government will look into all the recommendations and promising to set up that committee to follow up on the dialogue. The President, however, told him that the government will rather provide assistance to the victims of attacks than compensations for members of the dreaded sect. Now, on the foreign scene, U.S. Democrats have won key elections in New York City and the state of Virginia in the first major round of polls since President Barack Obama's re-election last year. Preliminary results show that Bill de Blasio will replace 3-term Mayor Michael Bloomberg to become the first Democrat leading New York City in 2 decades. Terry McAuliffe beat Republican Ken Cuccinelli in a very close race for the governor's seat in Virginia. And Republican Chris Christie was easily re-elected governor of New Jersey. The outcome of the polls are seen as an early test of both parties' strengths ahead of next year's congressional midterm elections. So there you have it. Those are your news headlines. It's still a business morning. Bolaji, it's back to you.
Thank you, Ayo. Ayo will be back at 11.
That's right.
And for more stories, you can log on to our website, www.channelstv.com. When we return from the break, we continue with our theme for the day, which is financing Nigeria's infrastructure needs. And of course, we'll bring you numbers from the global markets place. Please stay with us. You're welcome back. If you've just joined us, this is Business Morning on Channels Television, broadcasting live from Lagos. Let's move over to the global markets place and see how the other stock markets around the world are faring. Starting off from Asia, where the market is closed for the day. We're looking at the numbers now. The Nikkei 225 was upside 0.79% at 14,337.31 points. We're looking at Shanghai. That's the China's index actually up. Okay, we saw that number downside rather. 0.82% at 2,139.61 points. The Hong Kong index was flat, upside 0.04% at 23,048.34. Still sticking with the news from Asia, where we're saying the benchmark indices will actually have outperformed that of Wednesday, while the rest of Asian equities were subdued as investors awaited further direction from the global central banks. We're looking at information coming from central banks around the world, and that may likely impact on what is happening in Asia. Let's move over to the US, where stocks closed mainly down on Tuesday, with Wall Street pausing after a two-session rise, as data showing the US services industry expanded more than expected in October. We said that offsetting softer economic headlines from that region. Looking at the numbers very closely now, the Dow Jones Industrial Average was downside 0.13% at 15,618 points. The S&P 500 lost 0.28% at 1,762.97. The Nasdaq, the technology index, was upside flat as well, 0.08% at 3,939.86 points. Let's check out the numbers in Europe. The market is just opening as we speak, and the numbers look quite impressive at the moment. The FTSE 100 upside 0.30% at 6,767.35. The DAX index is also upside 0.51% by more than half of a percentage point at 9,054.74. The CAC 40 index upside 0.83% at 4,288.45. The numbers in Europe, we're seeing most of the stocks actually gained. Of course, we're expecting some numbers from Berlin, Germany, where factory orders are expected to be released today. That, of course, Germany is Europe's largest economy, where there were predictions that the numbers may increase by 0.5% for the month of September. Retail sales in the 17-nation euro area probably fell 0.4% in September, and according to a median projection made earlier on, we're expecting that number to be at that figure when the final numbers are released by the authorities in Germany. Okay, we'll go on another break, and when we come back, we will focus on the theme of the day, which is infrastructure financing in Nigeria. There's been a lot of talks about how can the country move forward, revamping the manufacturing sector. What plans do the government have in place? What policies will be driving the financing of Nigeria's infrastructure needs? All of this and more when we return. Please stay with us. You're welcome back. A few months ago, there was an infrastructure roundtable that had in attendance the former Minister for National Planning, Dr. Shamsuddin Usman. Of course, the Securities and Exchange Commission authorities as well were present at that meeting. And there was emphasis on how to raise funds. How will Nigeria go about raising the monies needed to move the country to its next phase of growth? We were told at that meeting that the country needs about $2.9 trillion in the next 30 years to execute its integrated Infrastructure Master Plan. Now, this plan is a capital allocation framework which identifies the required investment to bring infrastructure in Nigeria in line with the country's long-term growth aspirations. We'll be looking at all of this right now on the program, and we've been joined by Professor Akpan Ekpo. He is the Director General of the West Africa Institute for Financial and Economic Management. Good morning, sir.
Good morning.
Thank you for joining us. And of course, we've been joined from our Abuja studio as well by Dr. Ese Owie. He is the Associate Fellow, Center for Infrastructure, Policy, Regulation and Advancement of the Lagos Business School. Thank you for joining us, Dr. Ose. We appreciate your time with us. I'm going to start with Dr. Owe, Ese Owe in Abuja. Let's just start with you there. Can you just tell us what state does the infrastructure of the country is? Where are we in terms of infrastructure development?
Basically, I think, that's a very open-ended question, but we very much know that today in Nigeria, we've got a huge infrastructure deficit. And at the end of the last round table, they identified a number of gaps, and we needed about 2.9 trillion naira to cover that over the next 30 years on a yearly basis. But the key issue remains, beyond raising money to finance infrastructure, what are the viable options? What do we need to do to get infrastructure financing right? So the issue is not what state we are right now. We know the state of infrastructure is very porous, but the key question remains, how do we get sustainable strategies to finance what we know is already decayed infrastructure?
Okay, I think we need to just let you tell us where we are, because I know that I believe that there have been some movement, so to speak, some development, no matter how small, from where we used to be a year ago before we got to this level. I'm going to get back to you in just a moment, Dr. Isse. Let's listen to Professor Ekpo. Could you just let us know, how do you think that Nigeria would raise that money? Of course, it's a long-term project, we're being told. $2.9 trillion, going by the situation in the country, the tight fiscal constraint that we have, looking at the international bond market, which has been saturated as well. How do you think Nigeria can raise that money, or what ways do we
Well, thank you very much.
take?
You know, we just completed a 2-day conference on financing infrastructure in West Africa, and a lot of discussions were made around Nigeria's infrastructure deficit. I think for Nigeria there are several options. One of them is being tried, the private public partnership, PPP, and also the Soviet Wealth Fund. The Nigerian Soviet Wealth Fund Authority has earmarked about $300 and something million yearly for infrastructure development. The other is that you also issue debt instrument, government bonds to finance infrastructure. But the main point I want to make is that we should look at the fact that the state, the government cannot shy away from being part of looking for money to finance infrastructure. In other words, we cannot depend solely on the private sector. The private sector will not come and build rural roads that we need to evacuate agri products. It has to be the state. So the state is part of it. Savings is one way of doing it, but domestic savings in Nigeria is very, very little. The other domestic resource, you say, is from taxation. But you know that in Nigeria too is also a problem. So the major, what we depend on is oil revenues. And part of that oil revenue goes to Soviet Wealth Fund, which is being earmarked to finance part of the infrastructure. So the deficit is large, it's huge, but you can't do it once and for all. You do it gradually, and you now select what you want to work on. And my own thinking is that we should concentrate on railway, on power, and on education, because we also have hard infrastructure and soft infrastructure. Because if you build the roads and the railways, you need human beings to maintain, manage, and so on and so forth. And they're all part of the infrastructural development.
All right, thank you. Dr. Owe, if you can still hear me from Abuja. A few months ago, when that meeting between the SEC and the former Minister of National Planning was held as to how to get financing for Nigeria's infrastructure needs, we were told at that meeting that the executive would have to seek legislative approval for that request to be granted. Do you know if that request was granted before the former minister left office?
Unfortunately, I mean, I don't work for the federal government, and I'm not privy to whether or not the then minister sought or obtained the consent of the federal government or the legislature to finance the infrastructure deficit. But the critical issue here is, how do we fund the infrastructure deficit? And at this point, we need to look at what the best practices are. First, as Prof has rightly mentioned, the provision of infrastructure remains the fundamental aim of government. So government primarily has a duty to provide public infrastructure. So should there be a deficit in infrastructure, it behoves the government to find sustainable ways of raising money to finance the infrastructure. Having said that, I think what the government would need to do at this point would be to explore the available options and the available mechanisms as to how to finance
the deficit.
But whether or not the then minister got the approval or got the consent of the executive to approve the legislature, I wouldn't know. But I think that is the way to go.
Do you think that the government can go ahead with funding this infrastructural gap without approval from the legislation? Do you think it can go ahead without any approval?
No, I mean, I think there are different options. I mean, the government has options open to it. And already you have the Infrastructure Concession and Regulatory Commission, which is a designated national authority in Nigeria for structuring public-private partnerships. I think the ICRC already has their PPP guidelines and the National Infrastructure Master Plan. To that extent, I think there's already a framework for the federal government to tackle the infrastructure deficit. Whether or not they have to revert to the National Assembly for legislative approval is a different issue entirely. There is currently a framework nationally at the federal level to synergize between the public and the private sector and to develop ways of financing the infrastructure deficit. So the issue of, a subsequent legislative approval is secondary. The most important thing is that we have a framework as it is today to bring the public and the private sectors together with a view to generating synergies and getting the required financing to cover the infrastructure deficit.
Okay, Dr. Owe, just hold the thoughts. We'll get back to you in a short while. Let's listen to Professor Ekpo, and let's look at the options, which I think Dr. Owe is trying to drive at. We've talked about the PPP, the public-private partnership. To what extent has that taken shape? In what way, what direction are we taking in that regard?
Well, in some aspect it's on. But the PPP has to be very careful. It's not as simple as it looks. Can be very complicated, because the private sector has the expertise and the skills to negotiate. And if you don't take time, you call it public-private, it may end up being more of public than private. But some projects, I made to understand, have been undertaken under the PPP. But the financing options that you have, you need a mix of options. You can't just rely on one. Okay. And let me also say that as part of the budgetary allocation for the year, the capital budget, if you build in infrastructure needs into that budget, and the House approves the budget, and the President assents to the appropriation bill, you now have at least some money to jumpstart what you want to do. And let's make the point that even for you have to prepare your infrastructural needs for it to be attractive to investors. Even preparing the documentation itself is very expensive. So it's not just building of the railway.
How long is that going to take? Because
it takes time, but you have to be seen to have started. You can't start a railway, a rail line today and complete the next day or next year. Some of this thing takes, like a power plant project, 3 to 5 years. So it means that for each year you have to be guaranteed that there's a flow of funds. Okay, there's the financial options could be from multilateral institutions. Okay, for example, we are told that the railway and the road going from Lagos to the border has the World Bank financing. So it's a mix. Okay, you don't have one size fit all.
Okay, let's get back to Dr. Eseowe in Abuja. There are concerns that Nigeria could face tight lending capacity as well as increasing fiscal constraints, as it plans to raise funds for infrastructure financing. How do you think these concerns can be handled?
Can I get a question again? It's brief.
So there are concerns that while Nigeria is planning to raise funds from the international markets, international bond markets, the Central Bank of Nigeria's governor was quoted as saying that the market is liquid. That means we have a lot of money to take from the marketplace. There are concerns, however, that there could be tight fiscal constraints in that regard. How do you think we can balance these issues in order to go ahead to get the funds needed to finance Nigeria's infrastructure needs?
I'm afraid I can't hear it. Can you come again? It's actually quite bad. I can barely hear.
Okay, perhaps we have to get back to Dr. Eseowe just in a moment. Let's move back to the studio while we try to sort out that audio condition. Dr. Owe, I was trying to, Professor Ekpo, I was trying to ask Dr. Owe, what can be done to balance the issues of tight fiscal constraints we face on a yearly basis? Don't forget, we still have to finance our budget deficit and all that. And if we have to go ahead to the international market to raise money, how do we balance these issues not to, so that it doesn't become a burden for us?
Well, it's a kind of priority. We have tight fiscal, as you said, because of how do we reduce our spending pattern. If you want to still sustain what I call fiscal rascality, then you're going to have a problem. So it's kind of priority. If you feel that infrastructure is a priority, and then you reduce the other things that you are doing that are not of urgent need, okay, and that is debatable in another session. But I was argued that if you look at our debt GDP ratio, okay, it allows us enough space for us to borrow because we've not reached the threshold. But that doesn't mean that you have to keep borrowing when your debt profile is still rising. So, in my view, that I don't see the sense in savings, okay, when you need that money to develop infrastructure that has multiplying effect on the economy. So why not reduce drastically your savings for now and invest that portion?
You mean savings into the excess-accrued account?
Into the sovereign wealth fund.
Okay.
Yes.
Sovereign wealth fund and excess-accrued account.
Yes, exactly. Use that to build infrastructure.
Well, we've been told severally that we need those backups. They're actually backups for Nigeria's economic growth.
You need the backup, but what is your... See, infrastructure deficit now is so huge that if you invest on that, the multiplier effect is enormous. You generate a lot of employment and so on and so forth. So what's the point keeping the money and being managed even by foreign banks? So why not use most of that money to build infrastructure? Because when you keep borrowing, you are indebting future generation unnecessarily. So if you don't have the money, then I can see the need to borrow. Or you do a mix. So I think most of the money going to excess-accrued account or sovereign wealth fund, so a large part of it should go to develop infrastructure.
Okay. Yes. So there were some scenarios at the Senate and House of Assembly of recent where there were stories that Nigeria seems to be broke, there's no cash flow, and then all of those things. Is that a good signal?
Well, for me, I don't think Nigeria is broke. See, a country is broke. If you're broke, you need a bailout. We're not Spain. yet. But you can have some cash problems because of the bureaucracy or your dependence that the flow is not coming in the way you expected. But if the cash trap continues for a long time, it becomes a problem. So we've
been having issues with remittance from the NNPC for
yes,
months. They've not,
yes,
some accounts have not been funded.
If that continues for a while, then it becomes a problem. So that has to be fixed. Otherwise, it becomes a problem.
All right. Let's try and get back to Dr. Ese Owe in Abuja if we've been able to fix that audio condition. Dr. Ese Owe, can you hear me now? Hello, can you hear me now?
Yeah, it's slightly better.
Okay, sorry for that. I want to ask you, the World Bank has said in the reports that 53% of the challenges being faced by the manufacturing sector in Nigeria is infrastructure related. In the short term, because we know that we have a master plan of the 30-year period, how do you think we can tackle these deaths of infrastructure, by revamping our manufacturing sector and ensuring that things get kick-started? How do you think we can go about it?
Yeah, I think for manufacturing, the most two critical factors for manufacturing. The first is power infrastructure, which, in my opinion, we are on the right track for. Just last week, we successfully privatized the PHC and successor companies. We may not see the impact in the next maybe 3 or so years, but certainly we're on the right track. Should we get power right, it means that our manufacturers are in for a good run. Secondly, we need to get transport infrastructure right, because manufacturers depend on good transportation network to get their finished products to the consumers. So the moment we can get our power issues sorted, we can get our transportation infrastructure sorted, it means the manufacturers have at once stable power and a good network of roads, rail, air, and the last mode, which is the multimodal transport, which can either be the inland waterways or trucking to get their product to the finished market. The good news is that we are making steady progress. There's a lot of room for improvement, but with what has happened in power and with what the BP DG said a few weeks ago on the transportation infrastructure reform, I think that our manufacturers will be better for it. But the minute we fix power infrastructure, we fix transportation and get an enabling framework for competition policy, which is key, because in the absence of competition, you can't really regulate. Once we get those ones right and get efficient industry regulators, then I think our manufacturers are in for a good one.
Okay, we'd like you to hold your thoughts for us gentlemen on the program. We're going to go on a very short break, and when we come back, we'll continue our discussions. We've been talking to Professor Akpan Ekpo. He is the Director General of the West Africa Institute for Financial and Economic Management, and also from Abuja, we've been talking to Dr. Ese Owe. He is the Associate Fellow, Center for Infrastructure Policy, Regulation and Advancements of the Lagos Business School. We'll be right back. Okay, welcome back. You've been watching Business Morning on Channels Television, or home stretch now, and we've been looking at infrastructure financing in Nigeria. What can we do to bring an end to epileptic power supply, bad roads, and all sorts of things that are hampering our developments in the country? And we've been talking to two gentlemen. Professor Akpan Ekpo is the Director General of the West African Institute for Financial and Economic Management, and also Dr. Ese Owe. He is the Associate Fellow, Center for Infrastructure Policy, Regulation and Advancement of the Lagos Business School. Thank you, gentlemen, for still being a part of the program. I'm going to start off with Dr. Owe in Abuja. Can you hear me very clearly now? Okay. I would like us to look at the power sector, which you mentioned before we went on the break. In 2010, we're told by the central bank that over 109 billion naira has been disbursed to finance power sector projects in the country, and we've been told just yesterday by the BPE that over a total of $357.7 million we have to be spent this year alone to revamp the power sector. Now, looking at these figures and going by the need in that sector, do you think it's enough, to get things started?
Well, I mean, I think we must commend both the Power Ministry, the federal government, and the BP for keeping the power sector reform on track, the roadmap on track. As we speak, they've realized around, I think, well over $3 billion from the privatization. And the private investors have committed about the same amount in terms of expansion and upgrade over the next 3 to 5 years. When you consider what is our current national budget for capital projects, it's about 1.3 trillion. So what they have committed to invest in is about 30% of our annual budget on a yearly basis. So I think in terms of reform, we are very much on the right track. We've made tremendous progress. The capital injection is something that certainly, if we had left that to the federal government, there's no way we would have invested that amount of money over the next 10 years. It may be a drop in the ocean, but I think it represents a significant leap in our quest for sustainable energy supply. Going forward, I think what we need to do going forward is to get an appropriate framework that would engender sustainability, because for power projects you require huge capital outlay. Unless you have the private sector players having, a bit of a cushion or a bit of comfort on the part of government, trying to give them tax breaks, you give them, reliefs and all of that, they may not be commercially viable. But should we have the right regulatory approach, should regulators be alive to their responsibilities to ensure that while we do not stifle the desire of the private investors to recoup their money, we also ensure that consumers get access to good service. I think the power sector reform is very much on track, and the quantum investment so far clearly indicates that investors have confidence in the system and that we're on the right track.
Okay, Professor Ekpo, I'd like us to look at one option that we haven't mentioned on the program, which is having to raise Islamic bond. It's one of the ways to finance infrastructure in Nigeria. In fact, we have a report here that says that the British government is planning to issue £200 billion to finance infrastructure in the UK, and that is an economy which is well advanced than Nigeria. Do you think it's a viable option for us at this point, going by these expectations from the Islamic bond market the world over?
Well, I always argue that the Islamic financing is an option which we have to key into. You mentioned the UK went to raise about £200 billion for that. not just UK, Senegal, yeah, Cote d'Ivoire, the Gambia, they're all using Islamic financing for their infrastructure. And Nigeria has the advantage to key into it and raise millions of dollars from that, from the Islamic bond. I think they call it the Sukuk or something. So it's an option which we should key into, we should buy into, and a lot of benefits to be gained from it. So I don't see anything wrong with it, yes.
You mentioned earlier on in the course of this conversation that the public-private partnership is seems not to be a balanced one between the government and the private sector.
Yeah.
What do you think can be done to ensure that there's a synergy and both parties work together and faster as well?
Well, you see, we have a framework already, the Constitutional Commission. All I'm saying is that the PPP, if you don't have on the side of government or in the commission that we have now, the experts and expertise to know how to negotiate so that it become a win-win situation, private sector will always be ahead. In that sense, you may end up as a public partner, you may end up paying for the private sector. Okay, so we need people who are very skilled in it to make sure that it is a win-win situation. It's a good option, but you need those who are good at it to make sure that Nigeria gets the benefit, and we don't end up taking care of the private sector. It involves, some of it involves you sign a long lease concession about 25, 30 years, and while you're doing that, every year you're still paying the private investor some compensation yearly. So you need people who are skilled at it. I'm not skilled at it. Who can make sure that it becomes a win-win situation, so that at the end of the day, it doesn't become just government subsidizing the private investor. And Nigeria has done very well in terms of having that framework. But we need to train our people in the public sector, those who are engaged in this, so that they make sure that we get the best out of the PPP arrangements. Okay,
Dr. Eseowe, if you're still there, you talked about having a framework for competition earlier on. What do you think should be the components for this framework in the power sector?
Can I get you again, please? It's breaking again.
You stated earlier on about having a framework for competition in this power sector as relating to infrastructure development. What do you think should be the framework? How should that be? What should be the components of the framework?
Okay, thank you. For competition policy, we have two options. We can decide to go the horizontal route, which means we've got a kind of across-the-board framework for competition across all sectors. What that means is that across the board, be it power, be it transportation, be it aviation, you've got competition rules. Another option is to say, get sector-specific rules for power. What that then means is that you look at the specific dynamics of power and say, how do you prevent unfair pricing? How do you prevent collusion? How do you prevent price fixing? For me, the option is the government to make. But I would suggest that given the gale of privatization and private sector participation in our public sector infrastructure development, there's a need for an industry-wide, across-the-board competition policy that takes into cognizance the fact that the primary responsibility of government is to provide infrastructure. And should you have the private sector participating in the provision of infrastructure, we must ensure that citizens get value for money. It is in pushing for the value for money concept that you bring in competition policy. So for me, the options are two. We can either go across the board, or we can say, since we've got power right at this point, let's focus on power and ensure that new investors do not unnecessarily tweak tariffs, do not unnecessarily hike prices. We have the Electricity Regulatory Commission. They should live up to their regulatory responsibilities and ensure that, yes, while we are happy with the new trend, but we also don't want consumers to be shortchanged by the private investors. Thank you.
Right, thank you. Dr. Eseowe. That's where we'll wrap up this interview. We've been talking to Professor Akpan Ekpo. He is the Director General, West African Institute for Financial and Economic Management. And from Abuja, I've been talking to Dr. Eseowe. He is the Associate Fellow, Center for Infrastructure, Policy, Regulation and Advancement of the Lagos Business School. I want to thank you, gentlemen, for being a part of the program. We appreciate your time with us. And that's where we'll draw the curtain on this week edition of the program, midweek edition of the program, I beg to say. We want to thank everyone out there for watching the program. We appreciate your time with us as well. We hope to see you again same time tomorrow. I am Bolaji Akinwale.